Spices Board has launched Spice Exchange, India's first virtual platform for spices exports at a hybrid function here. The SpicExchangeIndia.com is a 3D virtual platform aimed at connecting the country's spice exporters with buyers around the world beyond the constraints of time, space, and language. The portal uses AI-based technology to connect relevant spice buyers with the Indian spice exporter. Buyers and sellers can access the database to find potential customers on this platform. The portal works as an extended office, enabling the subscribers to conduct virtual meetings with their customers. Earlier, launching the portal, Som Prakash, Union Minister of State for Commerce and Industry, pointed out that spices have contributed greatly to the country's export basket, despite the pandemic. India presently enjoys a dominant share in the global spice market by exporting 225 different spices and spice products to more than 180 countries. He said that export development and promotion, value addition and quality improvement continue to be thrust areas for the government, and the online platform will immensely add value to the government efforts in increasing export. D. Sathian, Secretary, Spices Board, said that the pandemic has forced the board to conceptualize and create this unique portal, but we feel it's highly relevant and beneficial even after the pandemic period, as it easily connects the exporters and importers. This will help in creating greater new business opportunities for the spice sector with the help of technology. Divakar Nath Mishra, Joint Secretary, Ministry of Commerce Industry, said the Spice Exchange India will facilitate ease of doing business and is definitely a giant leap in strengthening export transactions of spices from India. School holidays can be a special time for extended families to gather. Children may see their grandparents at seasonal gatherings or as part of childcare arrangements to help working parents. New research suggests the biology, environment, and the food they share contributes to children's future health. According to the World Health Organization, 39 million children under 5 years are overweight. Some 25% of Australian children and adolescents are overweight or obese. How parents contribute to their offspring's obesity risk is well established, but the link between grandparents and grandchildren has been less clear. Our systematic review of studies involving more than 200,000 people around the world confirms obesity is transmitted across multiple generations of families. We still need to figure out why and how to break this cycle. Obesity among children and adolescents is associated with developing health problems. These include high blood pressure, cholesterol imbalance, insulin resistance, diabetes mellitus, accelerated growth and maturity, orthopedic difficulties, psychosocial problems, increased risk of heart disease, and premature mortality. We examined the current global evidence on the association between grandparents who are overweight or obese and the healthy weight status of their grandchildren. We looked at 25 studies that involved 771 people from 17 countries. The combined data confirms obesity is transmitted multigenerationally, not just from parent to child, but also from grandparent to grandchild. We found children whose grandparents are obese or overweight are almost twice as likely to be obese or overweight compared to those whose grandparents are normal weight. Further research is needed into how children's obesity status is influenced by their grandparents, but there are likely two pathways at work. The influence could be indirect via parents' genes or occur directly through the roles played by grandparents in children's upbringing. Let's start with biological factors. Both egg and sperm cells contain molecules that respond to the nutritional intake of parents. This means traits that are susceptible to high weight gain can be passed on from grandparents to parents and then to their grandchildren. And evidence shows genetics, environmental factors, lifestyle, and eating habits all play key roles in predisposing individuals to obesity. What we eat and feed our family members can lead to the expression of certain genetic traits, which can then be transferred to successive generations. Due to shared familial, genetic, and environmental factors, obesity tends to aggregate within immediate families, and studies have consistently reported an intergenerational transmission of obesity from parents to children. Food intake can also influence health and biology across multiple generations. In Sweden, a study reported adequate food for paternal grandparents at 10 years of age reduced heart disease and diabetes, and increased longevity among their grandchildren. Though, Grandparents' weight status and choices about what and how much is eaten in their home could influence their grandchildren's weight directly or via the children's parent. These influences may be greater or less significant depending on the role grandparents play as primary caregivers or in shared living arrangement. According to the recent Australia's Seniors Survey, 1 in every 4 Australian grandparents provides primary care to their grandchildren. Grandparents' role as caregivers significantly affects children's healthy eating knowledge, attitude, and behavior. This might be seen in the meals shared, recipes passed down, or special treats for loved ones. Such habits can add to childhood obesity risks, above and beyond genetic factors. Our research shows the importance of including grandparents in obesity prevention strategy. In addition to parents, grandparents could be oriented to provide guidance on responsible feeding, recognizing hunger and fullness, setting limits, offering healthy foods, and using repeated exposure to promote acceptance. They can help encourage regular exercise and discourage coercive feeding practices on their grandchildren. While our study shows a multigenerational link in the transmission of obesity, most of the available evidence comes from high-income countries, predominantly America and European countries. More studies, especially from low-income countries, would be helpful. Further investigation into the effect of grandparents on grandchildren's obesity across different races and ethnicities is also needed. Grandparents have varied social and cultural roles in the upbringing of their grandchildren around the world. More data could help design effective obesity prevention programs that recognize the vital importance of grandparents. Nifty 50 January Future. Equity markets across Asia are down for the day as all the major indices are facing considerable selling pressure. On the back of this, the Indian benchmark indices i.e., the Nifty 50 and the Sensex have lost over 1% each and are at 17,575 and 58,870 respectively. Among the Asian majors, ASX 200 and Nikkei 225 have lost 2.3 and 1.4% respectively. Also, Hang Seng lost 0.8% and Kospi is down by 1.6%. The market breadth of the Nifty is showing a bearish bias as the advanced decline ratio is at 13 to 37. Like the benchmark indices, the mid-cap 50 and the small-cap 50 is down by January 4th and January 1st%, respectively. Barring the Nifty FMCG index, all other indices are down for the day. The Nifty PSU Bank Index is the top loser, down by 2.5%, followed by the Nifty Consumer Durables, down by 2.3%. Futures. The January futures of Nifty began the session with a considerable gap down at 17,670 versus yesterday's close of 17,804. The contract, after hitting an intraday high of 17,695, started to fall sharply. It is now trading around 17,600. The nearest support is at 17,500, its 50-day moving average. A bounce off this level is likely. Support below this level can be seen at 17,400 and 17,275. On the other hand, the price area between 17,660 to 17,700 can be a resistance band. Subsequent barrier can be spotted at 17,760. Although the market is facing significant selling pressure and the markets across Asia are in the red, the contract is likely to witness short covering when it falls to 17,500. This corrective rally can extend to 17,700. So, traders can wait now and buy if it rebounds from the support at 17,500. Place stop loss at 17,400. When the contract moves above 17,600, revise stop loss to 17,500. Liquidate longs at 17,700. Strategy. Buy the contract when it dips to 17,500 with stop loss at 17,400. Shift it to 17,500 if price moves above 17,600. Liquidate the positions at 17,700. Supports, 17,500 and 17,400. Resistances, 17,660 and 17,700. The week is likely to end on bearish note, with strong negative signals emanating from global equity market. SGX Nifty at 17,770 indicates another 140-point gap down opening for Nifty on Friday, as Nifty futures slumped further to 17,808. Despite the yield on the U.S. 10-year Treasuries declining 2 basis points to 1.78%, markets across the globe are nervous due to geopolitical tensions and the recent drone attack in Abu Dhabi. Analysts, however, expect the market to find the bottom soon, as the phase of the fall is quite quick. Market experts believe that institutions which are offloading Indian equities currently will soon stop their aggressive selling and may accumulate quality stocks, as some of them appear value buying post-correction. The street fears that the U.S. Federal Reserve will have to accelerate further its tightening pace. Also, breaking the back of this bullish market are rising oil prices, which have jumped to a 7-year high amidst supply concerns and drone strikes, said Prashant Taps, vice president at Meta Equity. Asian markets are in deep red in early trade on Thursday, tracking U.S. stocks, which after opening on firm note on Thursday, slumped around 1%, as investors are yet to gain confidence in equity. Japan's Nikkei, Korea's Kospi, Taiwan Weighted Index and Australia's All Ordinaries tumbled between 1 and 1.5% in early deal. Shrikant Chauhan, head of equity research, Kotak Securities, said market sentiment turned further bearish as the specter of a rate hike by the U.S. Fed continued to loom large, with the continuing flight of foreign capital from local bourses further dampening the sentiment. According to Ajit Mishra, VP, Research, Religer Broking, markets are currently facing global headwinds and there's no relief on the domestic front as well. However, we feel it's a healthy correction so far and expect Nifty to hold the 17,600 zone. For traders, the major challenge is to tackle the volatility amid the earnings season. We feel it's prudent to limit positions and prefer a hedged approach until markets resume the uptrend. Investors, on the other hand, shouldn't worry much about the recent fall and maintain their focus on accumulating quality stocks on dips. According to Shrikant Chauhan, the Nifty broke the important support of 17,900 while the intraday formation is still weaker. For traders, the 20-day SMA, or 17,700 would be the sacrosanct support level. Trading above the same, a pullback rally could lift the index up to 17,850 to 17,900 level. However, a fall below 17,700 could see the index retest the level of 17,650 to 17,600. Omicron-related mobility restrictions have led to a sharp week-on-week decline in daily flyers in the country. Numbers from trade sources suggest there has been an over 33% drop in average daily flyers in the second week of January, at 1.92 lakh, compared with 2.88 lakh in the first week. Departures have declined by about 19%, 2,101 in the second week from 2,590 for the previous week. Similarly, the number of flyers per departure has dropped to 91 in the week ending January 15, 2022, from 111 the previous week. Rating agency ICRA anticipates 40 to 42% drop in domestic passenger traffic month-on-month in January. It said domestic passenger traffic dipped 34% during January 1 to 17, as against the same period last month. Domestic passenger traffic is likely to witness a month-on-month decline of 15 to 17% in February, resulting in a temporary slowdown in recovery in Q4 FY22. Renewed fears over the Omicron variant of SARS-CoV-2 have led to a sharp decline in daily passenger count, from 3.55 lakh in December 2021 to 1.92 lakh during the week ending January 15, 2022, an ICICI Securities report said. Changes in schedule. The country's largest low-cost airline, Indigo, confirmed it was operating 1,200 to 1,300 flights daily on select routes, a 20% fall. According to Rikant Pittai, co-founder, Ease My Trip, the portal has seen some rescheduling of tickets, trips due in January being changed to February. However, cancellations have not been that high. In fact, at least 15% of the bookings for January have been rescheduled to February or further. Forward bookings, though lower than expected, saw a month-on-month growth for a 15-day period in January. Advance bookings saw a 15% growth on a 15-day basis, with a 40% jump in query. Cancellations are low and there is quite a bit of rescheduling, he said. Area under course or Nutri cereals has declined by over 1 lakh hectares as on January 14 during the current rabi season. According to the Ministry of Agriculture, sowing of coarse cereal crops such as maize, barley, jowar, ragi and bajra has been completed on 47.82 lakh hectares, compared with 48.91 LH during the same period a year ago. Normally the area under coarse cereals during the rabi season is 56.05 LH. Data show that while farmers have shown preference for maize and barley this year, they are losing interest in other crops such as jowar, bajra and ragi. Sujay Rakshit, director of Ludhiana-based Indian Institute of Maize Research, told Businessline that maize production is good during rabi than kharif. The maximum coverage is in states such as Bihar, Karnataka, Telangana, Andhra Pradesh, and Maharashtra. Cultivation of maize is increasing rapidly in West Bengal and the yield is increasing in Bihar and West Bengal, said Rakshit. He said more farmers are favoring maize over rice because rice needs excess water. Maize, on the other hand, needs just 3 to 4 rounds of irrigation. The feed industry is importing from maize-growing states. For example, Punjab has been importing maize from Bihar and West Bengal. This season we expect good yield across maize-growing states, Rakshit added. A trade analyst said maize production will be good in Tamil Nadu too. With prices in the mandis looking up, the area under maize will increase in states such as West Bengal, where it had increased in 2020 after jute prices dropped sharply. Currently, quality kharif maize is arriving in southern India, say traders. According to Suresh Singh Chauhan, General Manager, AMDD Foods Private Ltd, the area under maize in Bihar could have increased but for the untimely rain. Rains affected maize sowing to some extent, leading to farmers planting wheat, he said. Mukesh Singh, director of Mumbai-based Mubala Agro, said maize production could be affected this year as cold weather might impact the quality of the crop. The weather is colder than usual this year and it could affect the growth of the grain in the pod, he said. In Gujarat, the area under maize has been recorded at 88,715 hectares against the 3-year average of 1.08 LH, down 18%. Compared with last year, sowing is marginally lower, though crop prospects may be affected due to unseasonal rain. In Maharashtra, about 2.75 LH are under maize cultivation. In Telangana, maize, generally grown in about 1.75 LH, has been sown on 0.95 LH as of now. This is a tad lower than the as-on-date acreage of 1.12 LH last year. Asked why farmers have not opted for millets and maize as they are desperately looking for good alternatives to paddy this season, S. Mulla Reddy, a leader of All India Kisan Sabha, said millets did not offer good yield or return. They get hardly 2 to 3 quintals an acre. It is not encouraging for them, he said. He, however, feels that maize might gain a bit. There is still time for sowing, he said. A huge drop in paddy area in the rabi season has not benefited coarse cereals in any way in Telangana. The 3 main crops of maize, jowar and bajra could, at the most, match the normal average acreage, going by the latest figures compiled by the state's agriculture department. While the area under most other rabi crops has surged, coarse or Nutri cereals, particularly sorghum and maize, have reported a dip in Gujarat. Prices weren't attractive for jowar and maize last year. And there were alternative crops such as wheat and chana, which prompted many farmers to shift away from Nutri cereals, said Ramesh Borania, a farmer from Rajkot district. More unseasonal rains are expected later this week in North and Central Gujarat district. Hence, there could be some impact on the maize crop, said a district agriculture officer in Central Gujarat. Cereals including bajra and ragi saw higher cultivation at a combined 9,509 hectares, up 6% from the average of 8,987 hectares, in the western state. Gujarat's sorghum cultivation was recorded at 14,255 hectares as of January 17, 2022, against the three-year average of 24,494 hectares, showing a drop of 42%. Of the over 56 lakh hectares under rabbi, coarse or Nutri cereals account for over 22 LH in Maharashtra. This season, 13.51 LH in the state are under jowar. Other cereals make up 0.11 lakh hectares. In Karnataka, jowar acreage is lower compared with last year, as farmers continue to shift to other remunerative crops such as pulses. Jowar acreage as on January 13 stood at 7.31 LH, compared with 7.64 LH in the same period a year ago. Also, the acreage is lower than the target of 8.35 LH set by the state government. Over the past 5 years, jowar acreage in Karnataka has declined 27%, from 10.05 LH in 2017 to 7.31 LH this year. Farmers are opting out of jowar due to the lack of economic viability and are shifting to other remunerative crops such as Bengal gram, said Hanumanaguda Belagurki, Chairman, Karnataka Agricultural Prices Commission. Also, the lack of mechanization for jowar, especially for harvesting, is another factor against it. In a recent report, KAPC had asked the Karnataka government to increase jowar procurement to 5 lakh tons for distribution through ration shops. Belagurki said distributing Nutri cereals such as jowar will not only help address food security but also nutritional security. Andhra Pradesh seems to be lagging in sowing coarse cereals, 1.51 LH against 2.38 LH last year. In a normal year, the state grows coarse cereals in 3.19 LH, including 1.90 LH of maize and 1.14 LH of jowar. This is the fourth report of the 5-part series on Rabi crops outlook. The Subject Expert Committee of India's drug regulator Central Drug Standards Control Organisation has recommended an upgrade for the use of Covishield and Covaxin from restricted use to regular market use for adult population. DCGI will evaluate the recommendations and give its decision, it added in a post from its official Twitter handle. The development comes after vaccine makers Serum Institute of India and Bharat Biotech had applied for market approval for their respective COVID-19 vaccine. It was reported that SEC had met last week and had asked both the vaccine makers to submit more data before grading market approval. Currently, both the vaccines are currently authorized for emergency use only. The market authorization would allow companies to sell the vaccines commercially for use without reservation and condition. Both the COVID-19 vaccines are administered in 2 doses, with storage conditions at a temperature between 2 to 8 degrees Celsius. Both the vaccines are being used for public vaccination programs under the government-run largest vaccination drive for COVID-19 mass inoculation. Out of the total 159, 71, 20, 155 doses administered till January 20, 2022, Covishield forms the majority share with 37, 40, 16, 744 doses, while total Covaxin doses administered so far stand at 21, 77, 23, 906. Notably, Covaxin is being used for the adolescent vaccinations, whereas both the vaccines are being used for the precaution doses being administered for frontline/healthcare workers, as well as senior citizens. What was the deal all about? In 2005, ASRO arm Antrix agreed to launch 2 satellites for private company Devas Multimedia. The agreement included unbridled 20-year use of 70 MHz of S-band spectrum. Devas Multimedia agreed to pay $40 million as pre-launch capacity reservation and $250 million for satellite capacity lease. Devas wanted to offer satellite broadband services across India on various platforms, including mobile. It claimed to have developed its own portable device, which acts like a Wi-Fi router. Why did the deal run into trouble? The deal promised Devas Multimedia access to 70 MHz of broadband spectrum in the 2,500 MHz band. In 2010, the Union government got nearly 67,719 Indian rupees crore from the auction of just 15 MHz of similar airwaves for 3G mobile services. In 2011, the Comptroller and Auditor General of India asked the Department of Space to explain the preferential allocation of S-band spectrum without competitive bidding, diversion of public resources from ISRO's budget to two customer-specific satellites for Devas Multimedia, and misinforming regulators about the project's financial aspects and commercial implication. Subsequent investigations showed that officials had suppressed material facts to get the deal approved. The deal was terminated in 2011. What happened next? Devas Multimedia filed legal challenges against the cancellation of the agreement in Indian and International Arbitration Tribunal. In 2015, Devas won an arbitration award of $562 million against Antrix at the International Chamber of Commerce. The Permanent Court of Arbitration Tribunal upheld the award. Devas has also been able to get court rulings in Quebec and Paris, allowing it to seize assets owned by the Indian government or its affiliated entity. India has appealed in Indian as well as U.S. courts against the arbitration and seizure order. What was the Indian government's response? While Devas was winning in international courts, India filed an application with the National Company Law Tribunal to wind up Devas Multimedia, citing fraud. In May 2021, the Bengaluru bench of NCLT ordered the liquidation of Devas Multimedia Private Ltd, declaring that the company was incorporated in a fraudulent manner for unlawful purposes. On the contention of Devas that the fraud was claimed neither in the termination letter of 2011 nor before the International Criminal Court during arbitration, the NCLT observed that the fraud emerged post-2016 when the Central Bureau of Investigation probed the deal. The NCLT order was upheld by the National Company Law Appellate Tribunal in September. Devas appealed to the Supreme Court, which then upheld the NCLAT order. What does the Supreme Court order mean for Devas? Armed with the SC order, India can appeal in international courts against the arbitration award. India can argue that since the 2005 deal has proven to be a fraud, the award needs to be revoked in the light of fresh evidence. Devas will continue to push for seizing more assets in other countries in lieu of the arbitration award. What next? There are several cases filed by Devas in different international courts. India will have to fight these cases till there is a final decision on the arbitration awards and seizure of assets in foreign countries. Gold futures in India opened flat and slipped into red on Thursday. Gold February contract on multi-commodity exchange opened in flat at 48,379 Indian rupees per 10 grams, against previous close of 48,377 Indian rupees. Gold moved in a narrow range with negative bias even as international gold surged to hit a highest level since November 2021. MCX silver futures was little changed at the opening with marginal gains of 97 Indian rupees at 64,502 Indian rupees per kg, as against previous close of 64,405 Indian rupees. MCX silver March had ended the previous session above an important level of 64,000 Indian rupees. CME gold futures for February contract opened at $1,840 an oz on Thursday, nearly unchanged from previous close of $1,843.20. Gold futures climbed $31 on Wednesday to hit an intraday high of $1,843.90. Gold is seen gaining strength ahead of crucial U.S. Federal Reserve meet on rate hike timeline. CME silver futures crossed $24 levels and opened at $24.185 an oz on Thursday against previous close of $24.230. Silver gained over 3% intraday on Wednesday, gaining over 70 cents. Both gold and silver futures hit highest levels since November 2021 amidst strong investor sentiment. MCX gold February futures opened flat and slipped in red to trade in a narrow range on Thursday. The yellow metal last quoted at 48,360 Indian rupees per 10 grams, down 17 Indian rupees at 10:34 a.m. Thursday. The open interest for the February contract was 4,706 lots. MCX silver futures gained further strength after closing above 64,000 Indian rupees levels on Wednesday. MCX silver March futures traded with 0.2% gains on Thursday. Silver was contract last quoted at 64,525 Indian rupees a kg at 10:34 am on Thursday, up by 120 Indian rupees from previous close. The open interest was recorded at 8,029 lots in the early trades on MCX. Spot gold maintained 48,000 Indian rupees levels and was last quoted at 48,250 Indian rupees per 10 grams of 999 purity fine gold as quoted by India Bullion and Jewelers Association for afternoon rates on Wednesday. Spot silver gained strength to surge above 63,000 Indian rupees in retail market. Silver prices last quoted 63,557 Indian rupees a kg on Wednesday, according to IBJA. On the gold surge, analysts maintained that the prices rose as the dollar rallied and a global bond sell-off eased momentarily. Silver prices rose as geopolitical tensions between Russia and Ukraine offered some support to the metals, maintained the analyst. MCX gold futures price range is expected between 47,730 to 48,740 Indian rupees, while silver is expected to trade in the range of 62,484 to 65,510 Indian rupees. January 20, India's daily addition of new COVID-19 cases crossed 300,000 on Thursday. The Health Ministry data showed a total of 317,532 new cases and 491 deaths were registered in the 24 hours ending 8 am on Thursday. The new cases were 12.2% higher than 282,970 recorded yesterday. The daily test positivity rate has shown sustained rise as 180 tests were conducted in the last 24 hours, with daily TPR at 16.4%. The weekly TPR was recorded at 16.06%. India's active caseload now stands at 19,24,051, with recovery rate currently at 93.69%. Total 23,990 recoveries were recorded in the last 24 hours. The active cases are 5.03% of the total cases recorded so far. India's total cumulative cases now stand at 382,18,773 since the start of the pandemic. Total fatalities are now 487,693, with case fatality rate of 1.28%. The Health Ministry informed that the country's Omicron tally inched up to 9,287 with an increase of 326 new cases, or an increase of 3.63 since yesterday. Total vaccination coverage now stands at 159.67 crore doses, with 73,38,592 doses administered yesterday.